Hello traders, the title of the video is how bullish Harami candlestick pattern signals a bullish trading signal. All right? How a bullish Harami candlestick pattern signals a bullish trading signal. All right. So traders that are very new, the bullish Harami is a specific candlestick pattern when one has a bearish candlestick bar first, and the second candlestick bar is bullish, but the body of that bullish candlestick bar is within the range of the first bearish candlestick bar. Did you get that? All right, let me explain it one more time. So you see here we have a bearish candlestick bar, this one here. We highlight the high and the low. All right, so from the high to the low, we have the range of that bearish candlestick bar. If after that bearish candlestick bar, we have a bullish candlestick bar, and the body, you see this is the body of that bullish candlestick bar, is confined, is within the range of the first bearish candlestick bar, we have what we call a bullish Harami. So this is a bullish Harami, those two candlestick bar here. All right. The first one is bearish, and the second one is bullish, which is this one right here, is bullish. This is what we call a bullish Harami. Now, as I told trader before, when we're talking about a pattern, we must think of the location. Now, if you are talking about a bullish Harami, it's likely to take place during a bullish trend, so price pull back and then form a bullish Harami. Those are the time when we can see a bullish Harami. We can also see a bullish Harami at the end of a bearish trend. One more thing, the bullish Harami is more likely to be formed at a specific key level, a high influential key level or support level. So you can see here the price went up first and then start pulling back. At the end of that pullback, we have a bullish Harami. It's a very interesting scenario here because I'm on a quarterly chart. So you may be wondering, George, why you are not using the hourly time frame. Though this strategy is valid on every time frame, on the quarterly chart is quite powerful because the position traders, the hedge funds, the mutual fund, the professional trader use the quarterly chart if they want to position trade. So as a day trader, swing trader, we are following the position traders. So on the quarterly chart, this bullish Harami is completed only if the two candlestick bars are closed. Those two candlestick bars must close. So remember the video that we posted before, all right? A common candlestick pattern trading mistake to avoid as fast as possible. I recommend to traders to watch that video so they do not go around using candlestick pattern anyhow because those two candlestick bars must close. So you want to ascertain, is he at a key level? Is he at a support level? Is he at the end of a downtrend? Is he during a bullish trend? To ascertain whether it's a valid, right, bullish Harami. So the Harami, if I'm correct, it's a Japanese word, something being impregnated. Am I correct? If I'm not correct, correct me in the comment section. So the scenario is this, that you have the first candlestick bar is closed, it's bearish. All right. So the dominant fall during that time was bearish. So the dominant fall was bearish. But the next day, there is another candlestick bar, but completely the opposite of the first one. So they will say that bearish move has impregnated, or we should say instead, that smaller bullish candlestick bar has impregnated, all right, the bearish, okay, candlestick bar. So they will have a baby, all right, bullish candlestick bar after that. So this smaller one impregnated the bearish one, creating another bullish candlestick bar after that. So when we see the bearish candlestick bar and we have the smaller one that is confined within the range of the first one, we have what we call a bullish Harami. Now, as I told you, you want to ascertain that you get a valid one. The next thing, let us answer the question now. How a bullish Harami candlestick bar signals a bullish trading signal. You'll be surprised. A lot of traders know about this pattern. They will say, Joe, you are not teaching anything new. We all know about it. But when it comes to trading the bullish Harami, a lot of traders will go all over the place. All right. And today I will show you exactly what you need to do. So you highlight the high and the low of the bearish candlestick bar first. All right. That's it. Okay, the high and the low of the bearish candlestick bar. Then you will highlight the high of the bullish candlestick bar. That's it. Sometime you can also highlight the closing price of the bullish candlestick bar. I'm just mentioning it because you'll be surprised sometimes that the price will prefer, instead of the high of that bullish candlestick bar, the price will prefer instead the closing price. So just remember that. Draw the high, the low of the bearish candlestick bar, and you can draw the high or the closing price of the bullish candlestick bar. But just know that normally we should only highlight the high of the bullish candlestick bar. But sometimes we can highlight the closing price. All right. So this is what I've done here. So here, 2009, something very interesting is happening here. The Federal Reserve was telling the market that they will stop devaluing the dollar. So, all right, you see here, very interesting, signaling that a lot of money, okay, will come from the bond market into the stock market. So devaluation, low interest rate. What's the point of putting money in the bond market? People were taking money out of the bond market into the stock market. So it's a very, very powerful signal that we have here, that bullish Harami. All right. To avoid that the video is too long, let's go back to the main topic. So you highlight the high, the low of that bearish candlestick bar, and also I only highlight the high of the bullish candlestick bar right here. Okay, so right place, a lot of things happening, confirming to her there is a high chance this move here will continue up. All right? So how do we trade? We throw it away. So I'm on a quarterly chart. So now that I've done my homework on the setup time frame, I will go first to the monthly chart, because if I go to the weekly chart, you won't see what I want to show you. That's why I'm going to the monthly chart. Normally, we should go to the weekly chart. If we go from the quarterly chart, we should go to the weekly chart or 3-day chart. But because if I go to the weekly chart, you may not see what I want to show you. I'm going to remove my moving average 14, which I do not really want to, but here it is. So pay attention carefully. Right? I'm going to remove also these two arrows here. So you see here, so you see the pink line is the high of that bullish candlestick. You remember that? Look what the price did after that. After that candlestick bar on the quarterly chart is closed, that bullish candlestick bar is closed. All right. The price breaks above. You see this one here. Can you see it? I'm talking about this one. That candlestick bar. The price breaks above the pink line and retest it. That's your signal right there. Break above and retest the high of that bullish candlestick bar on the quarterly chart. So we have first the bearish candlestick bar, then we have the bullish candlestick bar that is confined within the range of that bearish candlestick bar. We verify, is he at the key level, is he at the support level, all right? Is he at the end of a downtrend, all right? All right, is he during an up move? Is he at the right place? Is he likely to be a good or valid bullish Harami? You're happy. A lot of things were going on during that time. One will go to remind, according to the policy, Federal Reserve policy, well, we'll go to the mind of the position traders. They'll be willing to buy. And here it is. This is the signal. So when it breaks above it and retests it, those candlestick bars that are retesting it are closed on that time frame. We have what we call, okay, a bullish Harami trading signal. So you see the two smaller candlesticks that were retested here. After that, we will implement a different time frame trading method to enter the trade. If you are a position trader, a lot of position traders did enter the trade here. If you want to swing trade, you enter right here. If you want to day trade also, you enter here after it breaks above and retest it. Though I am using quarterly chart and monthly chart, all right. Normally we will say quarterly chart, 3-day chart or weekly chart, and then we go to the what? All right, 4-hour time frame to enter the trade. All right. We can apply the same strategy on the daily chart. A lot of traders love the daily chart. That's not my favorite time frame, but traders can use daily chart for looking for your bullish harami. And then you use the hourly time frame. So you go to the hourly time frame, look for a break above and retest. And then you will enter the trade on the 10-minute time frame. If you apply this strategy on the 4-hour time frame, the 4-hour time frame is your trading setup. You will be going to the 15-minute time frame looking for a break above and retest, and you'll be entering the trend on the 3-minute time frame. And so on. If you're on a monthly chart swing trading, you will be looking for your bullish harami. On the monthly chart, you ascertain that it's a good one, is it good reason, what's going on, and so on. All right, it's closed. All right. If you use it on the monthly chart, your signal time frame is the daily chart. So you'll be looking for a break above and retest on the daily chart, and you'll be entering the trade on the hourly time frame. If you do not want to enter the trade on the hourly time frame, you will break it down to the 10-minute time frame, and so on and so on. So to summarize this short tutorial, the bullish harami will signal, the bullish harami trading signal at the time when the pattern is completed at the right place at the right time, and on the signal time frame, the price finally breaks above and retests and validated the high or the closing price of that bullish harami that has impregnated, so to speak, the bearish candlestick bar. Right, so you want to hit something, you have to aim easily. So a lot of people learn about the bullish harami and say they are shooting all over in every direction. They are just aiming. They don't have any aim at all. So what they are doing, they are just trying this, trying that. But there is a way to trade the bullish harami: break above, retest, turn around, validation of the high of that bullish candlestick bar at a support level. If it fails to validate the high or the closing price of that bullish harami, we cannot trade it. We will not trade it. It means that the bullish harami has failed. All right, pattern do fail. It's not because you have identified a clean-cut bullish harami that definitely it will go up. But if you follow the correct step, you avoid mistake, you avoid risk. So those are the steps that you want to follow and trade it properly like a pro, instead of just trading it anyhow without any proper plan. All right? So this will conclude our discussion today about how a bullish harami candlestick pattern signals a bullish trading signal. If you have any question or suggestion, put in the comment section. In due course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by sticking your beautiful thumbs up. If you think that this is George, I'm not impressed about this candlestick, blah blah blah, alright, mark it down, and that will put us under pressure to improve our next recording. If you think that this is an essential tutorial, this is an amazing tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how a bullish harami candlestick pattern signals a bullish trading signal. Happy trading to you all, and I will speak to you soon.